You're watching the Penthouse Pod. I'm Yael Geffen, your host, and our special guest today is Nondomiso Tropai. I hope I said your name correctly.
It's absolutely fine.
Phew. I'm so used to people butchering my name that I'm making such an effort. Okay, let's dive in. We're talking about all things property. We're talking about Absa Bank. We're talking about home loans. So let's talk about buyers markets and sellers markets. Those are very trendy words that are thrown around, or trendy phrases. Tell me, what are the principles of a buyer's market and a seller's market?
I love that question, Yael, because I've heard the question being thrown around a couple of times. But just to simplify it for the audience at home, a buyer's market is really where the buyers can demand and negotiate a price because there's more sellers in the market, which makes a lot of sense, right? And then on the other side, which is the seller's market, it's a direct opposite, where the demand is just too high, right? And of course, that does give leverage to the seller. But I do think, Yael, what's very important for the audience to understand is that it doesn't just sit as a dynamic at a national level. It does differ. There are regional nuances, which of course, you would have the deep insights. And I guess if you can give an example with the Western Cape market, which is fundamentally different from, let's say, the Gauteng market at this point in time.
That's why I was smiling at you, because we, as you know, we're a national brand and we're around the country. And every pocket, every province has a different market, you know. And in Gauteng, for example, it's a buyer's market right now. Lots of investors are getting involved again because the market's going up. And in the Western Cape, they've been in a bubble for quite a while. And it's a seller's market because there's a stock shortage. So it depends wherever you are, you know, and what's happening. So I like the principles that you gave. I think it's very easy to understand once you understand those principles.
Absolutely. There's another principle that, and you see it, I mean, you've got the data. We also see how long it takes for stock to move off the market. And as you talk about buyers and sellers market, when it takes stock so long to move off the market, then we know what's happening in that market. Correct?
Absolutely. Like in the Western Cape, if something comes onto the market,
it doesn't stay.
It's snapped up. Like even before we list it, it's gone. It's just gone. Whereas in the other nodes, it's, you know, there. But I always find it's interesting when one province changes, the other one kind of changes as well. So there's always like a equilibrium, like a scale, like a balance going on. It's a balancing act because the whole country is always affected by whatever's going on, whether it's economy, whether it's the interest rate. And speaking about the interest rate, let's chat a bit about that and how the interest rate affects your home purchase.
It's very easy, actually, and I love this story because I guess when we look at trends, and perhaps let's go just a few years back, COVID, you can see the impact of rates having come down and then the demand that came through. We saw it in the industry.
It was an 80-year low, an 80-year low.
Exactly. And the demand was so incredible. First-time buyers coming into the market. So if you use that example, it tells you that when the rate comes down, the cost of debt comes down. And of course, that enabled many more consumers to enter the property market. And we've seen it. Of course, the other way around is that when rates go up, it just becomes incredibly expensive from a debt perspective. And consumers then struggle with affordability because, of course, as banks, we look at affordability. It's a fundamental principle for us to ensure that we don't put the consumer in a position that they would be worse off in. I mean, we fundamentally believe in the National Credit Act and what it stands for. So very simply, the rates go up, becomes more expensive. When the rates come down, it creates the oxygen in the economy. And many more consumers are able to enter the property ladder.
What's interesting for me is a lot of us, and I'm sure some people in our audience, don't know that you can actually get your variable interest rate and actually fix an interest rate with the bank. And I'd love you to educate and shed some light on that.
And I love the names that you use. Variable changes, and fixed means it's fixed. That's the fundamental difference that our audience have to remember. Most consumers take a variable rate, so that rate moves up and down as and when rates change in the economy. And then there are consumers that go for a fixed rate, and often what they're looking for is stability. They want to know that I'm going to be spending so much every month for a certain period. Generally, in the market, fixed rates, you can fix up to 5 years. You get the option of 1 year, 2 years, 3 years, 4 years, up to 5 years. And of course, it's always important, I always say to customers that it's important to engage the bank, because the timing is also quite important, right? You want to fix when it is going to benefit you as a consumer. But also be aware that you can't just get out of the fixed rate agreement because there will be a penalty. And it's as simple as if I'm going to lend you money, I'm expecting that this is what it means for lending out money. So there is a penalty. I think sometimes customers do forget.
Yeah.
They forget. That's why I say...
One of those pitfalls.
It's one of those pitfalls. But absolutely it's there. The options are there. And they're open to existing homeowners, but also to those that are, starting for the first time. You engage your bank, and the options are there, and they will educate you on what the different options mean. I think the important thing is for you to understand what it is that you want as a consumer, because it must always be related to your own circumstances and what you're wanting to solve for.
In our industry, it's location, location, location. Yeah. In your industry, it's bond, bond, bond. I want to ask, how aggressive are the banks at the moment in lending? Because it's so important to that person that is purchasing their home to know what their bond is going to cost, what their affordability is, and what they're going to have to pay the bank.
I deal with that every single day. It's an incredible time, I think, in the industry, particularly from a consumer perspective, because there's good competition, which is good for the consumer. And also the other way of seeing it is when you look at various propositions across all lenders. There are so many propositions that are out there, more than ever before. In fact, I'm comparing to when I was a first-time buyer to what I see today, because it's very easy. You just go across all the websites and have a look and see what's happening. There are so many options that are available today. Whether you're buying a home for the first time or your second home, or you're a property investor wanting to build your portfolio. So it's highly competitive, which is good for the consumer. But I think also the other element is that, and I love the fact that you mentioned location, 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 because we also fundamentally believe in that. I do think it's important for consumers to know that whenever you think about the decision to enter the property market or to make that decision to buy property, you must always start with the self, your own individual circumstances, because there's a lot that's laid in there, and I'd love to talk about it in more detail. And then once you understand your own circumstances, your affordability, your credit rating, because that's important. I don't know how many consumers actually spend time to pull a credit report. You get one free credit report every single year. And we've got various credit bureaus, and they're able to give you a view of whether you're a good customer that banks can lend to. But also at the same time, what I've seen, because it speaks to competition, right, is that banks now offer that capability for you to see what your credit rating is. And because we work a lot with the bureaus, in addition to the propositions that are there. So absolutely, there's definitely competition. It's good for the consumer. There's more options out there. And I think those that are aspiring, I think it's a beautiful time to be aspiring, because there's more that's out there.
Well, that really helps the industry, and it helps consumers out there. Yeah. If the banks are being aggressive in their lending, if they're looking at their affordability. So yeah, I think you've shed some nice light on that.
Absolutely. Absolutely.